So we're going to get into our forecast right now. Basically what we did is we put a lot of our numbers together and we've gone through Krebs Calgary forecast, and we want to present a lot of it to you to show you why Calgary is a really, really good place to invest in 2024. So we'll get right into it because there are quite a number of slides here. The first thing is it's basically a summary. And what you want to do is you want to concentrate on the sales and price growth forecast on the bottom part of the slide there. And we mentioned it a little earlier that Krebs is looking at almost 10%, an almost 10% increase in price growth and, and sales growth. And prices are going to go up as well. So we're looking at a very, very robust year in the real estate industry. We expect there to be more supply to come on as the year progresses. We all know we're in a very tight supply situation right now where we're getting into multiple offers. It's hard to find good cash flow properties. We do still find them for people, and we're going to go over regions of the city where to find good properties in a later slide. But if you look at going past, that goes all the way back to 2014. So it's a 10-year comparison there. You see how the supply dips and increases. We showed you the earlier slide in our market update, the dips in COVID, in oil price crash, things like that. So those are things to be aware of, but overall 2024 is going to see growth in both sales and prices.
Yeah, and what's great about this graph here is thank goodness that we're thinking more supply is coming on, because in the last year, Tim, it's been frustrating just to get our investors into the market. And what's going on is people are getting outpriced at the market. So we've had clients that were pre-qualified, say a year ago, or not so much a year ago, but say for 500,000. And a year ago, you could find maybe a half duplex or a smaller house for under 500 with a suite in it. Now we're seeing half duplexes come on for over 500. We thought, and these are in some communities that we didn't think prices were going to get to this point. But you're going to see half duplexes continue, townhouses continue, apartments go up, and then prices under 750,000 we feel are going to keep growing at the pace they are right now. And if you missed our crew tip of the week, it will be on our YouTube channel in the next couple of days. But what it showed us for the tip of the week tonight was that for the past 20 years, we've been growing at a 7% growth rate. And we don't see that changing at all.
Yeah. So moving on to the economic summary, there's two things we focus on. This is GDP growth and oil price, just because we are in Alberta. So if you look at our GDP growth last year we were down 2.7%. That's 2023. This year we're predicting it to grow 2.1%. So we're not going to see huge growth in our GDP, but we are one of the provinces that is actually going to see some growth in 2024. And looking at the oil price, we're basically flat. Last year it was at $77 a barrel, and this is the WTI price in American dollars. And now we're predicting a $78 price over 2024. Nothing huge, but you can also see that because Alberta and Canada and the United States are pumping record numbers of oil right now, that price is starting to come down a bit. Now, there are outside factors, which I'll go over in the next slide, that may affect that. But if all things remain the same economically, we're going to have roughly that oil price, which is good. The oil sands producers, they're making a healthy profit at $78 a barrel. So it's going to fluctuate throughout the year, 68 to 88, something like that. But they still make a healthy profit, which means they're going to invest those profits back into the economy in Alberta. And there's so many people employed in Alberta relating to the oil industry that it's good for the housing industry.
Very good. Yeah, and just quickly, if anyone has any questions throughout the presentation, just put it in the chat. We are monitoring it. We can get to those questions. And if anyone has questions in the room, just put your hand up and we're happy to answer anything as well.
Yeah, so some of the risks that can throw our numbers out of the water is if the economy goes into recession. Now, what can cause that? Many things can cause that, but that's something that people have been talking about that probably for a couple of years now, that, the economy's going to tip into recession because there's too much government spending. But what we're seeing right now is, while technically we've been in recession the last couple of quarters, it would have been a very, very small decrease in economic growth. So we're not predicting any big recession, but then again, the world financial crisis hit everybody and we didn't see it coming. So that's one of the risks that's ahead of us. Environmental policy, that is a very big risk to Alberta's economy. If the federal government decides to curtail emissions so much that it's actually a production cap, that's going to affect the numbers that we show in this forecast. So depending on what comes out of Ottawa, we have to adapt, we have to adjust, and our economy has adjusted over the term of this our federal government right now. So we still are producing record amounts of energy right now. We are transitioning to greener energy. There's all kinds of wind and solar going into Alberta. So we are, as a province, changing so that we're trying to become more green. We're trying to help the environment, but it's a long-term thing, and government policy can be very short-term and affect that in certain ways. So that's one of the risks. Housing supply and migration. We're going to do a migration slide soon. Supply is very tight because our migration is up, our population is up, and we're not able to build. We had a conversation before the presentation with someone in the room that we are not able to build houses fast enough to cater to all these people moving in. There's too much migration. We're going to show you on a slide how much it is. So that's another thing that could throw our numbers off as the year goes on. So those things are going to affect supply and demand. Just keep them in mind when you are, say, doing an analysis on a rental property you're going to purchase. You may predict this huge cash flow because rents are this high, but then if migration stops for some reason, for whatever reason, some shock to the world, then that cash flow may come down. So you got to be aware of the risks when you're investing in real estate. It's no different than investing in anything else. You have to know the risks, and risk comes with every type of investment, whether you're investing in stocks or gold or things like that. You have to realize the risks before you jump in.
Yeah, and in saying that, when we run our numbers, when we buy a property for our clients, as Tim said, the last 20 years it's been going up 7%. We run our numbers still at 3.5%. We also run our cash flow numbers very conservatively because we know that we're at the peak right now. Rents have never been this high. Like, since we've owned the real estate we've owned, we've never seen this before. So we don't factor that into our analysis. We actually go off of numbers that we know will stick around, and we make sure at those numbers, at worst case numbers, that the property will still do very well and cash flow. So that is key, because things do change.
Yeah,
for sure.
So moving on to lending rates and inflation. Danielle went over what she thought would happen to the interest rate throughout the year. We're predicting it's only going to drop 1 point. This is the bank prime rate from 5%, where it is right now, to 4%. We've got it actually not even moving until Q3 or the end of Q2, basically in the summertime, moving down 1/4 point. The end of last year, we thought rates were going to start moving in the second announcement of the year, where the Bank of Canada announces in March. Right now, we're not thinking that it's going to decline then. We may have to wait another 2 rate announcements after that before we see a decrease. Reason being is inflation is still over 3%. The Bank of Canada's mandate is to keep it between 2 and 3%. So they're going to follow their mandate and keep rates high until we get that inflation rate down. And unfortunately, with government spending at record highs right now, that's one of the things keeping the inflation rate high. So certain things have to happen in the economy for rates to come down. One of the things these high interest rates are doing is they're pulling cash out of the economy. People are running out of spending money. I looked at a graph today about, it was from the United States, and at the height of COVID, that was the record amount of savings by Americans ever. And since COVID ended and interest rates started to rise, those savings that the Americans had, the record amount of savings, are basically gone. So they're right down to zero again. So that money has been pulled out of the economy right now. So what that will do is that'll drop spending. That'll lower the inflation rate, and that'll in turn lead to lowering interest rates. So anybody on a variable rate mortgage will see their rate start to decline. Anybody who's going to get a new fixed rate mortgage, they will be able to get it at a lower rate.
Yeah, so you look at the spending, what's going on, and thank God our investors have real estate to fall back on, because we know that with all the costs going up, interest rates going up, taxes going up, insurance going up, everything going up. I mean, I was at Safeway the other day, and a bundle of a bunch of asparagus was $9. $9 for asparagus. And I thought to myself, yeah, we're not having asparagus tonight. So so people are definitely, if I'm making choices like that, I'm like, and it's not really the affordability sometimes. It's just that I just can't bring myself to spend that much money. And the cost of meat, like, it's crazy. My kids love steak, and oh my goodness. Anyway, how does this affect real estate? And this is what we want to stress right now with lending rates looking at halfway through the year going into next year. With interest rates going down, it's just going to drive people that have been sitting on the fence to take action and finally move forward. There's a few things that other factors as well, Tim. People are renting at these high rents like we're talking about. They're going to be sick of paying the landlord's mortgage off and want to put that money to good work as well. So we know for a fact that with interest rates going down, that more people are going to get into the market. There's not the supply that we need, so that's just going to drive prices further upwards. So it's a bit of a catch-22. Do you get into the market now with higher interest rates, but you're going to pay less? And how much are we talking this year? I mean, some people out there are throwing out the number 10%, even if it's at 7%, what the last 20 years have done. We're already seeing that, Tim, in some communities that we're bidding on properties, that the properties are selling $50,000 to $60,000 this year already, above where they were selling 6 months ago. And 6 months ago was a good market, Tim.
Yeah, and what we're seeing is some people are getting into the market now, even though rates are high, to get ahead of that interest rate decrease. Because like Azad said, the interest rate falls, more people can qualify for that same product. They jump into the market and it actually bids prices up. So we're seeing people get ahead of those interest rate decreases. And yes, their payment may be higher now, but if they waited, they're paying a higher price and the payment's that high anyways. So it's kind of a catch-22 for buyers right now. But if you look at those graphs over time, the price increase, even if you're getting in at a high price today, we're going to still see those increases over the next 10, 20 years. So you're going to be ahead in long term. And we see it, the real estate price increase beating inflation every year for the next foreseeable future.
Yeah, and there's somebody in the waiting room there. And I just want to share a story, because I read the Australian newspaper every day because I own property down there. And I came into the office about a week ago and I was telling Tim, Hobart, which is like in Tasmania, no one goes to Hobart, or tourism's actually getting a little bit better in Hobart, but Hobart's prices were the lowest in the country for the longest time in Australia. And Sydney went up, Melbourne went up, Brisbane went up. Now, because of the affordability of those big cities, Hobart's prices have gone through the roof, and they keep climbing because they don't have enough building going on. They can't build the supply. So just those two factors, people moving into the city, not enough supply. If a city like Hobart, and I could tell you I'd rather live in Calgary than Hobart, Calgary will do just fine and continue on the path it's been doing for the last 20 years. So is it a good place to invest in? It's a safe bet that Calgary is going to continue, and we're going to get into the migration numbers where people are moving from, Tim, and it just blows our mind what's going on with that.
Yeah, but right before that, we'll look at employment. We're actually predicting employment growth to decrease in 2014, but and the unemployment rate is actually going to go up. But the only reason that's happening is because of the population increase. There's so many people coming here that they're sort of gobbling up these jobs, but there's too many people coming, so it actually looks like employment growth is going down. They're filling these jobs that are out there, but because there's so many people coming in, it's raising the unemployment rate. So it's kind of going to be about the same, 6.1 last year, 6.2% this year. Again, it's still a bit of a hangover from COVID, where Alberta's unemployment rate used to be one of the lowest in Canada. COVID hit, we started all working from home. A lot of the jobs disappeared, and we're still recovering from that. We're actually a little bit higher than some other provinces for unemployment rate, but we're going to see that that's just the way it is because more people are coming in. In the next 2-3 years, we'll probably see that come down once the immigration settles out and we get more and more employment centers in here, different types of employment other than oil related, which we're seeing. We did a whole seminar on that, about what types of industries are coming in. There's huge tech companies, not huge, but there's more tech companies coming in. There's all kinds of research and medical companies coming in. So we're getting a more diversified economy in Alberta, and that's going to attract, and that's going to attract a lot of jobs. That will bring the unemployment rate down, but probably not until 2025, 2026. Okay, so then we're going to talk about population, the numbers that Azad was just referencing. If you look at these numbers, this is for first 3 quarters of 2023. We don't actually have the numbers for the 4th quarter yet, but almost 100,000 people came in from international destinations, and roughly 45,000 came from other provinces in Canada to Alberta.
Yeah, so what's going on, and Tim and I have been working with a lot of people from different provinces last year, and they're just moving here for a better life, like, you know, affordability, and they're happy to move here. Like I remember when Zoe and Nick moved here from Toronto, they sold their place out in Toronto and almost paid cash for a place down, was that in Copperfield or just behind Copperfield down that way? And so they came here, took their money from Ontario, and have a very small mortgage, and now can live the life they want to live and start a family. So, and there's all sorts of stories like that. But I don't even know where these people are living. Like 145,000 people. That's huge, and that's why the rental market is so tight, Tim. Like people are lined up to find rental properties, and you know we just closed on 2 properties on Friday, and they both. Actually, one of them was going to be rented, and we're predicting a lineup of tenants. Even though this property is a townhouse in Sage Hill, we're predicting a lineup of tenants once it's online there.
Yeah, and it's a very good problem for real estate investors to have, because you can choose. You can have many applicants for one rental property, but you can choose the best quality tenant. We've never seen it so good. If you look back to, if you own rental properties at the beginning of the 2000s, like 2002, 2003, 2004, we didn't have the same quality of tenant competing for the properties that we have now. So it's a very good problem, this immigration thing, for landlords out there, because it's a positive. It drives the rents up. You can get better quality tenants who look after your property. We just don't see a downside with it.
Yeah, no, and when we say quality tenants, like high income earning tenants that shouldn't be tenants, but because they're new to Canada, they have to rent for a year or 2 to get their credit up, and then they can purchase. So the good thing about that, yeah, you get to choose the right tenants, and you know, if you look after them, they'll look after you as well. But yeah, the migration is real. You notice it wherever you are, and you even notice it on our roads. Our roads are busier now. You've got to give yourself time to get around. But where are these people moving to? Like, we're seeing the rents, Tim, like this. We've never seen rents like this before. Like a townhouse these days in Calgary, if it's not rented for $2,400 per month, something's not right. And basement suites, we're seeing them go over $1,500 per month. And then we're seeing upstairs with garage, double car garage or single car garage, roughly $2,500. So a suite of property should be generating roughly $4,000 per month. Right now, that's the going rents. And then condos, 2-bedroom condos on average are renting between $2,200 and $2,400 downtown. And if it's a newer condo, they're going all the way up to $3,000. So the prices right now are ridiculous, and there is some really good value out there in these sectors of the market, especially townhouses, condos downtown, condos in surrounding areas. You can pick them up for prices, and people will ask us all the time, are you buying cash flow properties? We only buy cash flow properties for our clients. So the numbers work. 100%.
Yeah, we've got some slides on the different housing types and the different areas coming up. But so moving on, just one last thing on population. We had 100,000 people come from overseas, from outside of Canada. Canada as a whole had a population increase by 1 million last year. So the majority of that was immigration. So we're seeing Canada as one of the top destinations in the Western world for immigration. And it just shows the quality of our country. It's a safe country. We're relatively low crime. You can go even to the big cities and there's not a whole lot going on. Compare it to some places like the big cities of the United States, and it's like night and day. You can walk downtown Calgary here in the middle of the night and not have to worry very much, you know. So it's a very safe place, and people from around the world want to live here. They want to raise their families here, and that's a good thing, so that we can increase our population and, you know, we can be more prosperous as real estate investors. So it's a good thing that will continue, and we'll just see where it goes in the next few years, whether the federal government's going to limit that a little bit until housing supply catches up, or whether they're just going to have it a free-for-all. Again, as real estate investors, you just want to keep an eye on that level, and you want to keep an eye on the number of units out there and the rental rates, so that you can price your properties to where they're supposed to be, so that you're making maximum cash flow.
Yeah, quick question in the chat, was that $2,200 for a 2-bedroom unit or 1-bedroom? That was for 2-bedroom. It doesn't have to have 2 bathrooms to get that $2,200, but a 2-bathroom, 2-bedroom would probably get $2,400 rent.
Yeah, so this slide is all about housing supply. What we see here is, even though we're building more and more supply, you can see the numbers in the last part of the last 3 years there. Housing supply, the builders are doing the part. They're trying to build more and more and more, but it's still not keeping up with demand. And you look at the rental rate, it went up 9.8% in 2023, and so far in 2023, we're picking higher than that, 10.6% in 2024. So again, that's a plus for real estate investors out there. For people who are just getting into buying rental properties, you can look at on RentFaster, look at the average rent for a property type that you're going to put on the market, or you're going to go to buy, and you're probably going to charge more than what's listed right now, because the rental rates are going to rise all year long.
Yeah, what's funny is with the supply, we know that the builders, developers, they just cannot keep up.
Yeah.
So we can't get there. And some developers are actually choosing to hold off just because of supply costs and labor shortage. So they're actually holding off on projects, which is not going to help the situation we're in right now. And what's being built, you really have to look at what's being built in Calgary.
Yeah, you look at the pie graph right there. The number of apartments being built is almost overtaking the number of detached homes, which is the blue slice there in the pie graph. So we're building more and more apartments and less detached homes.
Yeah, we were never in this situation. And what this is going to do is lower the supply on detached homes, which will just dramatically increase the prices going forward. Now, with the condo market, we can't even keep up with how many people are moving here. So even though they're building a lot of condos, what's going to happen to that market is that market is going to shift another 10% this year, simply because the affordability, that's where most people's price range is in. Not only that, if they're renting, like we were just discussing, if they're renting a $2,400 unit, to purchase a unit for $300,000-$400,000, depending where it is in the city, it's almost the same cost as renting that same 2-bedroom unit, where they may as well take their money, purchase a property, and then at least they're getting the 3 rates of return. They're getting the property to go up in value, and they're getting mortgages paid down. And then when they move out of it, they can rent out and cash flow. So the condo market, people think we had a great year this year. We're going to have a great few years. And the biggest reason behind that is we're not even at the prices we once were. These condos, I know the Chocolate Building, there's a Riva, there's a whole bunch of buildings downtown that they were selling in when they were pre-construction back in 2006, 2007. They were selling in the $480,000 range, and we're still $100,000 below that for that same product. So what we're saying is those prices were once there. We're not asking for a miracle. We're not telling you guys that, yeah, it's going to grow 10% and it's going to, beat all records. We just need to get to where we once were, and we believe with this population boom, oil is doing its thing. It will continue to do that, even with the new pipelines coming into play when they can finally build it, Tim, in the next few months. But you know what? Calgary is going to continue just because of those two factors, and we're trying to get to where we once were. So the writing is on the wall that it's going to get there. Now, these condos that we're talking about, the same 2-bedroom, say 2-bedroom, 2-bathroom for 300. That's what we're looking at downtown. Older unit, 40, 50 years old. That same product in Vancouver or Toronto starts at about 600, 650, and right now we're 300,000. So if you're renting in Toronto or Vancouver, and you could, the rents there are $4,000 per month for the same unit, where you can rent here for $2,400, or if you own, they're starting at $650,000, and here they're starting at $300,000. And there is a massive, massive gap. We say this all of the time on the older units compared to new in Calgary. New units for a 2-bedroom, brand new, start at $650,000 for 1,000 square feet. And the same square footage unit, same specs, but original is, you can still get it for around 300,000. So there's a massive gap between old, and there's a massive gap between old and new. And to make the old unit look like the brand new unit, I mean, we've got renovators in the room. It would cost roughly $40,000 to $50,000, depending on what spec you go with, to turn that unit into a brand new unit.
Yeah. So quickly in 2023, sales, 27,000 sales in the city of Calgary. New listings, we had 33,000, which was an increase over 2022, which is a good thing. We're seeing new listings come on. Inventory was down, new listings were down. Inventory was down 26%. Months of supply is down, and the price is up. So 2023 as a whole, you saw it as a seller's market. There was not enough supply, too many buyers, so the sellers pretty much controlled the market. That's why prices have gone up. This is 2023 in a nutshell. Moving on, we look at what Azad was talking a lot about is this compositional shift, what's happening to the housing types. And you can see the percentage of sales as relates to condos. In 2021, it was 15%, 2022, 21%, 2023, almost 30%. So we're seeing a greater amount of condos being sold and a smaller amount of single families being sold, dropping down to 46%. Now, years ago, Calgary was a single family home city. Probably 80% of the housing types sold in Calgary were single family homes. Builders would build whole communities. You can see it from the 60s, 70s, 80s, those types of neighborhoods. Acadia up in the north, Huntington Hills, Thorncliffe, Beddington. Most of the housing types in there are single family homes. If you look at the newer communities, you go farther to the outskirts, Evanston, Cityscape, Skyview, down in the South Seaton, communities like Glacier Ridge, which is out by the new Costco in the Southwest. They are probably 50-50 for single family homes and multifamily. You've got a lot of 4-story walk-up condos going up. You've got a lot of row homes, a lot of half duplexes. The mix of housing is changing. We're going less to this typical suburban bungalow where you got a big backyard. The lots are smaller now. We're increasing the density. That's just the way of the future. It's going to be in probably every city around the world. And Calgary is a little late to the party. We don't have a whole lot of multifamily. Edmonton has a lot more than us, but we're getting there. We're increasing the density, and also the affordability of those smaller units, the townhouses, the condos. It's a lot more affordable to people just getting into the market. As we know, you want to go buy a single family home, it's quite a bit more expensive than the average condo. And if you're young, or if you're buying your first rental property, you can't afford a huge price, you're going to get into the condo market to use that as a rental property.
No, exactly.
Okay, so Calgary versus Edmonton. If you look at the markets, they're actually we're quite a bit different in 2023. I'm just going to move something on the screen here. Yeah, so the benchmark price is one of the huge differences, and that's a reflection of the housing types as well. Edmonton is a lot more multifamily oriented. All you have to do is drive through some of the older neighborhoods, and they have, you know, blocks and blocks of these fourplexes and sixplexes and eightplexes. They have a lot more multifamily, so their average price, their benchmark price, is quite a bit lower.
Yeah, I mean, we are Calgary Flames fans, so we like to give Edmonton a tough time. But you know what, Edmonton, we tell people this all the time. Edmonton's actually going to do quite well this year, just simply because of affordability. We've actually been, you know, when our clients buy a property, we actually help them get it rented out. So we actually get a good feel of where tenants are coming from, and people, we had one property in Citadel that we're helping a tenant rent out, investor rent out, and the tenants there was probably 30 tenants that came to see this property, and there was a family there that was so frustrated because they just couldn't get a place. And I could tell you, luck wasn't on their side, because I think they had 4 kids and they were looking for a 2-bedroom apartment, and it'd be tough to get a rental for that. They were looking at they came from Edmonton, and they're looking to go back to Edmonton just because they can't get a place to rent here, because landlords have a choice. So we're going to be honest with you, just with people moving around the country and moving to Alberta, people are going to move to Edmonton, and it's going to drive their prices up as well. But Calgary has always done better than Edmonton. We have to stress that. You can see it in the numbers, Tim, if you want to go through.
Yeah, Calgary's more of a white-collar city. It's got the head offices for the oil companies. Edmonton's more of a blue-collar city. They have the service companies for the oil industry. That's just the way it's been. So the housing types have kind of been built around the buying power of the residents. And there's been more buying power in Calgary because of the higher paying jobs in downtown Calgary. That's not to say Edmonton is any less of a city. Maybe their hockey team's better than ours right now, but that might change. So you can see the numbers were down pretty much in everything across the board in Edmonton as well as Calgary, other than our price went up and their price went down a little bit. So comparing the two, we would always suggest that you buy in your own backyard. If you live here, buy rental properties here. If you live in Edmonton, buy rental properties in Edmonton. But if your affordability drops down far enough that the only place you can buy a single family home that you want to have at a certain level of specifications, and that one's in Edmonton, well, it's close enough that you can buy it and have it as a rental property. But those are the numbers that compare the two cities. We'll move on from there and go to.
So someone's just got a quick question for investment purposes for this year. Is Calgary better than Edmonton? You'll make more money off your Calgary real estate, that's for sure, but it's going to cost you more money to get into.
Yeah.
So you just have to understand both of those factors. It will cost you more. And the other thing with Calgary, rents are better in Calgary. You do yield more out of the properties here than Edmonton. It's just people's affordability up there. What kind of jobs do they have, and how much they pay in rent? It's definitely less than Calgary. That's just how it is. But at the same time, your price point to get in is less. So you just have to run your numbers. What we always say, like, if we have investors come to a meeting with us and they live in Tuscany or Royal Oak or Rocky Ridge up there, there's no way we're going down to Cranston or Copperfield or Mackenzietown to buy them a property, just because it's a pain in the backside if you have to go all the way down there. I mean, it's probably 55 kilometers. I don't even know how far that would be from. We had to do it the other day from one end of the city to the other. But at the end of the day, we always like to keep it in and around where our clients live, if possible, and if that's in their price range as well. It just makes it that much easier. But in saying that, you know, we've owned properties all over, so it's up to the individual. But yeah, Edmonton's going to do well.
So speaking about relative affordability, we always compare Toronto and Vancouver to Calgary's average or benchmark price. And you can see here just how those two cities have just jumped in the last, what is it, goes back to 2000, so 10 years. You look at 10 years ago, and Toronto's average price or benchmark price was just above Calgary's. And in those 10 years, it's spread out so much that it's more than double. The average house is more than double the price in Toronto. Vancouver's just up there as well. Over the last 10 years, those two cities being the biggest cities in Canada have been the destination for most of the immigration that has come to Canada. Most of the industry is in Southern Ontario, so that drives Toronto's housing market. Vancouver, again, it's a port city. It's got a relatively mild climate, so international people who come here, if they don't want to live in Calgary, Edmonton, where we get winters like we had, you know, a few weeks ago where it was -35, they will stick to Toronto, to Vancouver. So those two cities, you look at their price increases in the last 10 years, and it's just massive. So Calgary being very, very affordable comparatively to the large centers in Calgary, or sorry, in Canada, it drives people here who can afford, you know, the prices here, whether it's to afford to buy or to afford our rents. If you did a rental chart comparing these three cities, it would be roughly the same. Our rents are way lower than they are in Toronto and Vancouver.
Almost half to.
Yeah, like as I was quoting 2,200 for a 2-bedroom condo in Calgary, it's over 4,000 in Vancouver. So that chart would be the same looking at rental rates.
Yeah, and just so everyone can understand this graph here, Tim and I had breakfast with some CMHC guys a couple of months ago, and they were showing us this graph and stating that there has never been a big, there's never been a gap this big between prices between Calgary, Vancouver, and Toronto. We've always been, Tim, like a couple of $100,000 below where they've been, and then all of a sudden it's just jumped up. You can see back 10 years ago.
Yeah, if you stretch it further back to 10 years, those three lines will get closer and closer together, be almost the same if you go back 20 years, 25 years.
Yeah, so we feel that those markets we know, you know, in Toronto it's cooling already, but we feel Calgary will come back up just because of that affordability here. It will force Calgary's appreciation not to come to where they are, of course, but to meet halfway.
Yeah, and if you look at that benchmark price, ours is so low comparatively. That's why, as I've been saying for years, we feel that we're way behind those two centers, and we should at least be halfway, right? We're not even halfway in price.
Yeah.
That's why we were saying we should be at 650. Now we're saying 700 is probably the point where our average price is going to settle out for, you know, the next 10, 15 years. And we can even see, unless it's something happening to the population in those big centers, Vancouver and Toronto, their prices are still going to go up over the next 10, 15 years.
Yeah, so, you know, that's just writing on the wall that Calgary is a great place to invest. All these indications, normally we do this every year, and normally we have a few bad things to say. We haven't said anything bad yet.
Well, yeah, we can talk about the price. Some people are priced out of the market, but that's just the way it is. So we'll go on to the different housing types and their markets around the city. Now, if you look at detached housing, these are the benchmark prices, the benchmark price. We go up the average price, which will be a little bit lower than the benchmark price. But anyways, using these price amounts, you can see the various sectors of the city and what the prices are at around there. In the east and northeast, that's still where you'll get the lowest prices. We talk about it quite a bit. The east, when you're going east along 17th Avenue from downtown, you're looking at places like Forest Lawn, Dover, Forest Heights, those types of communities. We don't recommend buying rental properties in those, even though the prices are so low. Yeah, you can get some great deals, you can get some really low prices, but we don't recommend new investors going there at all. If you're experienced, you know how to deal with the type of tenant that lives in those communities, fine. We will help you buy a house there all day long. But because of the socioeconomic conditions in those communities, we recommend getting a little more experience being a landlord before you get into that type of situation.
Yeah, and we have to stress there are other investment realtors in the city that have no problem putting people into these communities. And we've actually, on our Crew TV, we actually went down and interviewed one of the tenants that was in our investor's property just to get a general feel of what's happening in, say, a community like Forest Lawn. And you guys should all watch that video and it will tell you exactly what's going on in that community. And there is no turning that community around. So other investor realtors out there will just maybe be looking at making a quick buck for themselves and just put investors into those pockets thinking, yeah, it will turn around. Some of those areas just won't. And we have to be honest about that. And Tim and I are the first ones just to put that out there to say, no, you're not buying there. And we get sent properties in areas, in and around where there's drug rehab centers, there's prostitution, there's gangs. And you really have to understand what's going on in that community and why. And do you need to own a rental property there? So we'd be the first one to say, hey, with that same money, you can go other parts in the city and get really good appreciating properties without having that hassle.
Yeah, and we understand why people think that they're going to turn around. There's communities like Radisson Heights, Southview. So they're just up the hill from the Bow River in the east there. And they have huge lots. They're 50-foot lots. They're nice bungalows on there. You'd think that because it's so close to downtown, that those neighborhoods should be gentrified. They should be building infills in there. They should turn things around. But like, because of the things that Azad had just mentioned, we're not going to see a turnaround anytime soon. It may happen in 20, 30, 40 years. But if you look at centers or communities like East Van in Vancouver, it's very close to downtown, but that community still has a lot of social problems, and it hasn't turned around yet. So you could have communities even in giant cities that are very close to downtown, the employment hubs, and they still have problems. They still have crime and gangs and things like that. So we don't see those communities in the east turning around in the near future. In the long run, yes, they have to turn around, but we just don't see it happening for a real estate investor to put them in there right now and hope that it'll change in 5 years.
Yeah. You know what we do see turning around here is the communities that do offer all the things young people want to have, like coffee shops or restaurants or bars. You see little pockets in the city. We had a meeting with a fellow that owns a pub or a bar in Bridgeland.
Yeah.
And he's going to be flipping homes, but you know what? You're down in Bridgeland and you've got all this new bars and new restaurants and stuff down there, and there's more condos going in. Those areas are going to be thriving, and those areas, we call them blue chip areas, because people that are earning great money that don't want to buy right now, they've got the money to pay high rents. So you could buy properties in there, even furnish them right now, and get. We've seen a guy sell rent something in a house in Arbor Lake. We're just up there the other day for $3,700, and it's furnished. And I can tell you, the furniture wasn't anything expensive, but $3,700 for a furnished place at a small house in Arbor Lake. Yeah. And what's going on up there is down the hill, you've got Crowfoot Crossing that they're even upgrading. A new restaurant went in there, or a big pub, I think it's Cactus Club or something like that, went in there. So when you see all this new stuff going in, and in little pockets like Marda Loop or Inglewood, even close to 17th Ave here, all of these areas are just going to continue to get trendier. Rents are going to get more expensive, but great places to buy because people with money want to live there as well. So that's where we think it's really going to go off in the next few years.
Yeah. So if you look at the prices around the city, the single family homes, the detached market, you can see that it's getting quite high in Calgary. So the days of buying a single family home and renting it out to one family are, they're not gone, but the amount of inventory is shrinking because the incomes to rent those properties has to be very high. So what we're seeing investors do is put suites in the basements of these things, or even buy a good building lot with a single family home on there, tear it down and put up a fourplex or duplex, things like that, because the prices are going so high. And we've got a question a couple of questions in the chat here. I just missed one. It says, in property appreciation, the graph looks better right now for the future between Calgary and Edmonton, acknowledging that Calgary already has seen a significant price increase in the last 2 years. We're going to see both of them increase, both Calgary and Edmonton, in the next few years, just because of immigration, just because of the desirability of living in this province, the affordability of this province. There's no land transfer tax. There's no sales tax. There's, those are huge advantages when it comes to living in a certain province.
Yeah, I actually seen on CBC News, they interviewed people out in Toronto and they were selling out there to go to Edmonton. So I don't know if they've been to Edmonton before, but that's where they're going. We'll see what happens. And I don't want to get the emails tomorrow, but Edmonton's going to do fine. We actually have a realtor that works for us up in Edmonton just because the demand's there. So do we believe in the market? If that's your affordability range, 100%, there's no problem there at all.
Yeah. Someone else said, I have a family friend bought a fourplex in Forest Lawn less than 2 years ago for $550. They get $6K a month. You can rent. The fourplex can now be sold in the 900s. Is it because the property is in a good part of Forest Lawn? It may be, but it also may be your family friend is a very good property manager, choosing the right tenants. People who did buy multifamily a couple of years ago, even in places like Forest Lawn, because of the limited supply of that in the whole city, they're making a killing. Just anybody who owned a fourplex or a sixplex or whatever, and they've gone through the last 2, 3, 4 years, the property appreciation is just massive because there's very little supply of that.
Yeah, so that really comes down to the fourplex. Now, we want to be honest with everybody out there because we do believe that every community in Calgary is going to continue to go up. There's no doubt about that. These areas like Forest Lawn, if you can put up with what you got to put up with out there, that's fine, go right ahead. But fourplexes, we had a listing meeting in Kingsland for a fourplex the other day. It didn't even have finished basements. I mean, you have to put in the basement suites to make it a fourplex, but man, their prices are way up there, and because there's nothing on the market.
Okay, we'll go through the other housing types pretty quickly here. We're pressed for time. The semi-detached market, what we're seeing is that that is where a lot of our investors have moved into in the last 2-3 years, just because the prices are quite a bit less than detached homes. The city also started to allow legal suites in semi-detached properties a couple of years ago. That helped because now you can have a suite in the basement of your duplex and legalize it, and the city accepts that. That was a huge thing. So we're seeing in communities like Canyon Meadows, Queensland down south, in the north, Huntington Hills, Beddington, in the northeast, places like Whitehorn, Marlborough Park, people who pick up these half duplexes and legalize the suites in the basement, they're making great cash flow because the property prices are quite a bit more affordable.
Yeah, and we want to stress that the best deals on semi-detached right now are finding properties without the suite and adding the suite yourself if possible. Or if the plumbing's in place or it's a finished basement and the kitchen just has to go in. I mean, it's almost impossible, Tim, to find suited properties out there. So finding a property that you can add in a kitchen or finish the basement, turn it into a legal suite. We have contractors that are ready to go to help our clients do it. They've done many of them, so it's not a problem. And they help you go through the whole process of legalizing a basement suite.
Yeah, so the row housing market, which is townhouses, what we're seeing with these things is they're becoming the single family homes that we were putting our clients into 10 years ago. As long as you can find them with condo fees below $350 a month, they generally cash flow quite a bit. But then you can rent out to a single family, and our couple of people, it's a single family dwelling. There's no suite in the basement. It's becoming very, very desirable. They're not building as many of these things as they are condos. So tenants are looking at these. They can get a garage with them. They might even have a little backyard so they can have a pet. It's becoming a very, very good rental property to buy, and the prices are affordable.
Yeah, so townhouses are the next best thing for, you know, semi-detached or detached home. The townhouse market, we were generally buying townhouses for the last 5 years around, depending on the quality of the townhouse, between 300 and 350,000. Now what you're going to see this year is from 380 to 400, and you'll even see those townhouses in the next few years go from 400 all the way up to 450,000. How do we know this? We know this because semi-detached last year went from 400 to 425 to 450 to 500,000. And this year we're already seeing semi-detached homes come on for 550,000. So if the semi-detached go up, the row townhouses are forced to go up because there's no supply coming on. So supply and demand will just jack those prices up even more.
Yeah. And then the last property, oops, one too far. The last property type is the apartments or condos. What we're seeing now is lots of investors are leaning towards buying condos as a rental unit, just because of the affordability of it. Again, we have to be on the lookout for those high condo fees because some buildings have been mismanaged over the years and their condo fees are $700,000, $800,000, $900,000. That will kill your cash flow quicker than anything. But if you're around under $600 for your condo fees,
yeah.
your condo's in a good, desirable community, and it's in a good location in the building. That's one thing we have to stress. We have people who come to us and say, why isn't my condo renting out? And it's in one of the towers, and it's facing another tower that's blocking the view to the west, so you can't even see anything. All you're looking at is a row of balconies. You need to have some sort of wow factor if you're going to buy a condo and use it as a rental property. You know, a view of something, or the closeness to an employment center, or
sun,
shopping.
sun.
Yeah, some sun.
You can get some dark apartments. Like, geez, this is going to be a tough one. Yeah, so you really want to pick. You know, not all units the same. Is it a corner unit? Is it a top floor unit? There's a lot of factors we look at when we're buying units for our clients. Where is this market going to go this year? I mean, as we said earlier last year, we were selling two bedroom, one bathroom condos, roughly 225,000. They're almost at 275,000 within a year. So that's
yeah, and you can look at the benchmark price in 2022. It's 266. And then in 2023, it's 302. Yeah. So that's in 1 year, it's gone up $40,000. And yeah. that's a mix of condos. So you're getting the expensive downtown condos as well as the older ones. But that's your average price there, 302. So you can look at this year as another $40,000 to $50,000 increase in the benchmark price.
Yes.
As the year goes on.
Yeah, so we see this market shifting to $350,000 average, which is huge. Okay. And the main reason for that, for everybody out there, is affordability. That's where a lot of people that are moving here, that's their affordability range. You have to remember 100,000 people moved here from another country last year, okay? 100,000. Now, when I moved here from Australia, it took me 2 years to get good credit, enough credit to buy properties to actually get a mortgage. So it takes people time. So with that 100,000 people, I mean, not all of them are obviously going to buy, but how many of those do you need to buy? We don't even have, I can tell you the number of condos on the market today. I think we're sitting at about 2,600 listings. And out of that 2,600 listings, about 900 would be condos. So we have 900 condos on the market, and that's all over the city. Okay, so we just don't have enough supply. And the builders right now, they're building rental buildings. They're not building apartments to sell. So there is only one way for condos, and that is up. And we're saying it's going to go from $300,000 to $350,000. And condos, it's cheaper to get into. You only need a deposit if you're moving into it. Geez, you need 15 grand. And if you're actually buying it as an investment, you don't need much at all. You could actually get a line of credit for that and buy an investment property.
Yeah. So these are the numbers for the surrounding areas. We've seen increases in prices in every smaller center around Calgary. So people always ask us, oh, is it good to go invest in Airdrie? Is it good to go invest in Strathmore or High River? Okotoks and Airdrie, they were the two bigger towns that are around us. their prices are pretty much the same as ours, and their rental rates are pretty much the same as ours. So if you have a rental property in Airdrie or Okotoks, well, I'll talk, Airdrie's pretty much close to Calgary. Okotoks, there's very, very few rental properties in Okotoks. So if you come across something that you can buy and use as a rental property in Okotoks, we would say don't hesitate to buy it. We've got a number of clients down there that have rental properties, and they charge very, very high rent because there's nothing to rent down there. We had a guy buy a suite of property in, what was it called? Sheep River, or whatever the community. Yeah. It's just before you go across the river into downtown Okotoks. And he bought it. We thought, wow, he's paying a huge price for it, but his rents are through the roof. So he's cash flowing almost $800 a month. And this is putting 20% down on, he paid $575 for it.
Yeah.
We thought it was a crazy price, but there are no suite properties in Okotoks, and there's no place to rent. So that's a very good place to invest. The other smaller towns, if you can find something in Cochrane or Chestermere or Strathmore, they're very good. If you have the ability to travel there to check out your rental property every now and then. Canmore, just don't even think about it. It's just way too expensive. It's very good for vacation rentals, but again, they don't have enough new condo buildings going up. They're running into a lot of friction with the residents there. They don't want to see these new developments go in, these new condo buildings go in. So that's keeping the prices very, very high.
We actually have an investor that has 3 Airbnbs in Canmore. He lives out there, and that's his job. He makes enough money off those 3 Airbnbs. The money was crazy that what was coming in, but it was covering all his costs, and he could do that full time. So it does cost a lot of money to get in. Out of these areas, Airdrie's really doing well. But there's a lot of construction going on up in Airdrie, so they're going to have more supply, so keep an eye on that. Cochrane and Chestermere, they're lifestyle communities. Cochrane is so close to, you can get out to the mountains really quickly. Chestermere, you've got the lake. You're really 20 minutes from this office downtown, so it's not that far away, and we see both of those areas plus Okotoks continuing to do what they're doing. Strathmore, Tim, you were out there showing properties not long ago. It's just a little bit further, and then the quality of, not the quality of tenants, but the amount of rent you can get out there is less than what you can
obviously get here. It's quite a bit further out. They're not building as much new product, so their older stuff is older, and there's quite a few, there's a number of stockyards around there, so you will get a certain scent in the air, depending on which way the wind blows. It's kind of like living in Brooks. Where they have the huge meat packing plant and the feedlots around there. So, you know, we have people who work in Brooks and they have rental properties in Calgary. They're talking about buying rental properties in Brooks because it's such a huge employment center. But again, you're catering to people who work in the meat packing plant, and you have to put up with the smell.
No, you have to put up with the smell. But these people earn good money, and Brooks they don't have enough housing for them. So they actually, Tim and I were looking at an apartment building, 12 units for $1 million, and needed work, but you could actually you could do all the work, rent it to you've got guaranteed renters and guarantee the amount of rent you're going to get, and then refurbish the property and get all your money back out within as little as a year. So very, very attractive. Yes, question.
How are you finding the rental come out of Cochrane?
Okay, the question is, how do we find the rental coming out of Cochrane? You know what, it's pretty much the same. We just bought a duplex in Cochrane. We paid $430 for it and went into multiple offers. It was a half duplex. How old would that place be?
In the late 70s.
Late 70s. So
illegal suite in the basement.
Illegal suite. Our clients were going in. They had to rip out the poly B. It had poly B. They're legalizing the suite, and they were getting the tenants that we actually assumed were paying very little rents, like very, very little, and they were in the process of terminating their lease and then getting new people in. So unfortunately, that's what's going on in Calgary and surrounding areas. These areas still have the same problems with supply in the rental market. So you can actually go in and charge Calgary prices in these areas. Just one thing as well with surrounding areas, we know satellite towns north and south of Calgary are going to do very well. We were down in Claresholm not long ago. There's developers down there that have built. Claresholm is 1 hour south from Calgary, and it's just a little community. They've got a little restaurant that was on that Food Network. You go there for the cinnamon buns, I think it is. Anyway, Claresholm, people are building duplexes down there because people don't mind living in an hour away and driving here, especially if they live south of the city. They're probably back into Calgary in 40 minutes. So, and there's little pockets up the number 2 going up to Edmonton that are definitely going to do this as well.
Yeah. So this is a summary from Kreb here. This is one of the final slides. So for 2024, they're predicting pretty much flat sales growth. 27,000 units are going to change hands, but the price growth they're predicting 6.5. We're thinking it's going to be, if all of the factors remain the same as they are today, closer to 10%, 10, 11, 12 for condos. Maybe overall it'll be 7.5%, but 6.5 is a good number to go off. It's still more than twice the inflation rate right now. Detached sales, you can see that they're going to be flat as well. If you look at down on the bottom, apartment sales, we're predicting more growth in that, more growth in row sales, which is townhomes. Semi-detached, that's going to be flat as well. So what we're seeing is very, very good numbers across the board for 2024. That's great news for investors. We know that the Calgary market is still on the up and up, and there's cash flow to be made. It's a good market to get into.
Yeah, especially when you look at the numbers here, 500,000 and below. So that would be semi-detached, row housing, and apartment sales. That's going to get the most growth, and we've been saying that all night, I guess, Tim. But that's where, if I was placing my money, that's where it would go into, and you just want to buy that right property, and you're lucky because that's what we do for you. So, so yeah, that's Calgary in a nutshell. What's going on?
That's our forecast. We like to do this at the beginning of every year, but this year we're forecasting it's very, very positive for Calgary. A few years ago, when we were right in the midst of COVID and right after it, our forecasts weren't very positive.
We still did it.
Yeah. But right now, what we're seeing is it's very positive all across Alberta, Calgary in particular. And if you're looking to invest in real estate, by all means, come down and have a chat with us.
Yeah, it's not too late. You might be thinking, geez, we're at the top of the market. We're nowhere near the top of the market. We're pretty confident on that. And if you want to understand why we're so confident, this book is a must read. It's free. You can get it on our website, crewinvesting.com. It's a simple download. It's called 1 Million Reasons to Buy Real Estate. We really do give you 1 million reasons in it. You're going to have to read it to find out. But it goes through the core fundamentals of investing in real estate. The second book here, it will cost you. It's on our website. It costs $20. I think it's even cheaper. It's $17. And it goes through all of the strategies that we believe in investing in real estate. I mean, we read the book Rich Dad Poor Dad over 20-something years ago. It changed our lives forever. The only thing about Rich Dad Poor Dad, it was great at getting you all excited of investing in real estate, but it really didn't give you the meat and potatoes that you need to understand and move forward in investing in real estate. And it's a great read. Everybody that's bought it.
All these people on the cover there, they're all past clients, current clients, and they share their success stories in this book. We showcase what they've done in all the different investment strategies, from flipping to buy and hold to lease options to rent own. Everything's in there. It's a very, very informative book. So if you haven't read it, go ahead.
Yeah.
And then
great response on the book. So the next thing is, by all means, this isn't for everybody. We want to stress this. This is for people that want to fast track their investment journey. What it does is it gives you access to our course that we've created. It's an online course. You have a membership. The best thing about it, you can cancel any time. But what do you get? You get 100 hours of content, which you can press play anytime you want. They're all videos on all different topics, from raising capital to doing joint ventures, to borrowing hard money, to using other people's money, to many other things like choosing the right investment property, what pitfalls to look out for, red flags. And it goes through, and it gives you a lot of things too.
Yeah, it gives you all the forms you need. It gives you all the guides, checklists, everything you'll need. It comes with our complete landlord kit, which we go through with every investor. So it has everything from how to get your property rented, how to place an ad, what leases to use, what move-in, move-out forms to use, everything you need to be a landlord, that's all in there. So, you know, it's everything you need to be a real estate investor is in this course.
Yeah, it's perfect. It actually saves people money because they don't hire a property manager. After they do the course, they do it themselves. And if you want to see the success from investors and what they're achieving, simply go on Crew TV, subscribe, and you can actually see we've got single mothers, we've got pilots, we've got doctors, we've got teachers, we've got all sorts of construction workers, all sorts of people, just everyday people just creating money from real estate. And the best thing about all of this is you get Tim and myself, if you are working with us, doing the course or not doing the course. I mean, the best thing about the meetup, people can attend for free and it's awesome. So if you choose to actually want to move forward and buy a property, you simply just book a meeting and we go from there.
Yeah, so there's some of the people in our old seminar, people in our room. There's not as many people in the new room now. Most people are online. But someone asked for our contact information right there. You can use those email addresses, or you can just use azad@calgaryrealestatewealth.com or tim@calgaryrealestatewealth.com. You'll get a hold of us either way. We'd be more than happy to help. We'll set up a one-on-one meeting to help you get started.
Yeah, we will be hosting another session in 2 weeks' time. Sorry, we went over tonight. Danielle, our finance girl, is coming in to show you the best strategies to get a mortgage for your next rental property. It's a great session. She will be here live in person. So if people want to come down or stay at home, totally up to you.
All right, so that's our seminar for tonight. Thanks, everybody.
Oh, that's a lot of info. That was a lot.